The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And it is a beautiful Monday, May 21st, and a nice, beautiful, sunny, almost cloudless day at the headquarters for technical trading and investing, TFNN.com, in the wonderful little hamlet of Clearwater, Florida. Wonderful day, and it is the 130th anniversary of the American Red Cross. It is American Red Cross Day. I always like to start off the show with whatever the special day it is. American Red Cross is a big proponent of blood donations. They always have the blood mobiles around in my neighborhood at the grocery stores where you can give blood. I recommend it highly. Probably have a little extra, too much blood. People used to be blood letters. Now you can't even get anybody to give any blood. Anyway, always a good and wonderful day out in the hinterlands on American Red Cross Day. So we're going to see, of course, everybody's talking about Google, but I know how to make a guaranteed trade for you today, and that's buy Italian cheese. Yes, Italian cheese, provolone. Provolone is a cheese, isn't it? All the Italian cheeses, because what happened, they had a giant earthquake there yesterday, and guess what? All the cheese is on the floor. $320 million worth of cheese. And, of course, it takes a little while, but I imagine the prices of Italian cheese, and, of course, I love me some really good Caesar salad, which I need, of course, a lot of Italian cheeses for. So I'm going to run out today and get my Italian cheese, get it ready to go. And that's it. There's always a little bit of ways, but I'll guarantee, I imagine that we're going to see real Italian cheeses very expensive here over the next 2-3 months. I didn't have a chance to check on it to come out, but maybe we'll get a chance. Krispy Kreme, I think it's after the bell, Campbell's Soup, Urban Outfitters, and Lowe's. Maybe Lowe's was this morning. Maybe I'll get during the break. I didn't have time to go back and look at these yet. But those are all the interesting one. In tech news, Chrome, the browser from Google, has become the most popular browser, edging out now for I think a couple weeks the internet browser from Microsoft. So Google doing fairly well with getting mind share and the eye share. And I mean I, not as an I, but E-Y-E, I share of a lot of the people out here in the markets. But I think that bodes well for them. I think Steve Rhodes asked me a couple weeks ago on the Tech Insider which company I thought had the, in the next year or two, probably had the best setup. And right now it is probably Google. It is probably Google for a few reasons. One, they've got a lot of the pieces, parts to dominate the web right now, and at the same time, they've got a lot of cash. They've got a lot of things going right for them. But I suspect that this is the year, over the next year, we're going to see them actually monetize Android, and I think that's going to be a big deal for them. Right now, I think they get like a $20 a piece licensing fee, somewhere in that neighborhood, $15-20 or so. That is opposed to the kind of money Apple's making. But I suspect that they're going to find a way to monetize that with ads on these, a lot of Google, but the Android-driven smartphones and tablets. And I think everybody's kind of screaming about Facebook, and they're they don't have a real good mobile position at the moment. But I think Android's done very well at getting in there, and I think that they're going to tunnel their way via the ad route, not in the direct licensing to the to the companies making these cell phones. But pretty big deal when Chrome beats Internet Explorer out there. I like Firefox myself, but that's just me. Europeans this morning announced that they have teleported photons 150 kilometers between the Canary Islands. Why is this important? This is one of the big things that's going to be in the next probably 10, 20 years. But being able to teleport photons is the basic part of communication from 2 points, and it won't matter how far these 2 points away, you'll be able to actually communicate instantly. Right now, if you want to use, let's say, a direct or HughesNet internet system, not only do you have the lag over the United States, the surface lines, but you have to go up 25,000 miles and then back down 25,000 miles. So you got a 50,000 mile round trip, plus back to the lines. Ideally, satellite communication would be instantaneous with this system. Some people have brought up the problems with quantum teleportation, and really I want to call it quantum communications. But literally at the speed of light, as fast as you can make electrons change their state, you'll be able to send data across a network without any of the latency that you now have. And, I think the first target market for this is going to be satellite-based communications and using this. But basically, when you change the state of an electron that's entangled with another one, it will change the energy in that one. So it's kind of complicated, but think like each particle has a buddy. If you actually look at the one you want to look at and see whether or not what state it's in, it's going to automatically change its state. So you pair these guys up, you look at the other one, you can then infer what the value of the one, half a mile away, or in this case 150 kilometers away, but they already have this thing sending data, and of course on the other end of it, when you change one on one side, the other one is going to actually release a photon on the other side. A photon's nothing more than light, so if you can have a sensor that can read it, it's very easy to send, or it will be fairly easy to send these things back and forth. The problem is breaking these things when they do go this far away from each other. You have to be kind of careful and treat them like eggs. A lot of times these things have to be at, basically 250 degrees below zero. A lot of technology that has to come before this is going to work. This isn't Scotty's beam me up kind of thing, but for working with data, the future of data and high-speed computers, this is the next, pot of gold down the line. But at 150 kilometers, they can actually what they call teleportation, which isn't the same thing that Star Trek is. Nassim Taleb actually came out this weekend on a BBC show called Newsnight. Nassim Taleb is he's got a great book originally called the first one was called Black Swan. I think it is mandatory reading for anybody in trading and understanding risk. He was more than able to put in that book why J.P. Morgan's use of VIR, which is the value at risk way of looking at your risk, is wrong. He said it's not a fluke, and basically he said that they are paying people more than gangsters to gamble away their money at these large institutions, and that what they use to actually monitor that is useless. And it's probably true. But if they actually use something, they'd never make the kind of money that they can do. So they're more than willing to have a few airplane crashes before they reform the system. In this case, I don't suspect that any of these large companies think that they can afford to use a different model because then they couldn't put the kind of margin on that they want. They're just hoping one day that their people actually do. Trying to see. Next. New York Post, if you are watching Tiger TV, I kind of thought this was fairly interesting. The front page of the new New York Post says Zuckers with a $20 bill with Zuckerberg on the front of it. Of course, I haven't looked at the price on it today. Last I looked, it was $35 or so. I hate these IPOs that everybody knows about. I want to get someone that not many people know about, that not many people are interested in. If everybody knows about it, then it's probably priced correctly. Big deal. Move on. And what a lot of people are saying is actually all this money that was in Facebook instantly left and went right back in Apple today. What's Apple at? $27.31. I've been talking in my newsletter since Wednesday about 533 on Apple being just a marvelous point of support for Apple, and that there was, in my opinion, there was heavy accumulation at 533. Had a nice little bounce on Friday, but looks like options expiration was more of an issue than anything else. Up $27 at the moment, 558, but it, of course, is taking everything with it on the way up. Most weeks, or actually the first 3 months of this year, I saw a study that said that 9% of the S&P volume over those 3 months was Apple. So almost 10% of the volume of the entire S&P 500. When this thing gets going, it's hard to keep the whole market down. S&P up 18 points right now, 1313. I suspect that what we have here is a end of a washout in this marketplace. I'm actually rather bullish, short term and long term. I think we could go up to 1345 or 1350 by Friday, just on short covering and light volume. Probably may have a little pullback after that, but I think we're setting up a QE3, and that's probably going to take us through the election, and I could see everybody raining money on the United States and elsewhere, and anything it takes to get elected. And I think that goes for both Republicans and Democrats. I don't think that there's probably a whole lot of difference. They all want to get reelected, whether or not they wouldn't be willing to give up their post to see the other person lose. So I have a feeling that they'll do whatever it takes to get reelected. So I'm kind of actually bullish, at least through the election. Up 18 points. We had a way oversold condition. We're going into a 3-day weekend. Volume's going to be light Thursday and Friday, and I suspect we're going to have a lot of short covering to come. Anyway, we'll be back and work through a little bit more of this news and get into some charts.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we look at this market, continues to squeeze up. S&P up 18 points. NASDAQ composite up about 67 and up 127 on the Dow. We're probably not going to have a lot of volume this week. We are going into a 3-day weekend. A lot of times we actually see the market change character after everybody comes back after this weekend. It's been, I think this is kind of just the bounce on it. We'll probably have to wait and see what the character of the market changes and how it changes after everybody comes back next Tuesday. But my guess is that we've been, the wolf has squeezed or screamed boo just a few times, and the boy who cried wolf, and it's going to eventually come out of it. Probably the low was yesterday when Kramer yelled that the impending doom and the apocalypse was coming, and the Amazons were right that we only have till December 2012 before the end of the world. Just about when everybody figures that that it is the end of the world, the market bounces. This week we have 2 IPOs. Not much happening out here. Corsair Components. Some people may know this if they build their own computers. They have a lot of gaming hardware, high-speed memory. They're going to raise $87 million, offering 6 million shares. It's somewhere between $12 and $14. Pretty much the midpoint of their range. IPO, another one is Tria Beauty, TRIA. They sell handheld lasers to consumers for at-home hair removal. That word, I know some women I saw this weekend needed that. Anyway, plans to raise $64 million by offering 4.6 million shares at a price range of $13 to $15. At the midpoint of the range. Tria Beauty, I don't know about that. 300 million doesn't sound like a whole lot in these days, but continuing to move on. I did find something this weekend, and I've seen it before, but it is floating around the internet again this weekend. You can give me a call, by the way, at 877-927-6648. I just wanted to go through these 10 rules. Bob Farrell's been around forever, and he has 10 basic rules for investing long-term, and I just thought I'd go through them if you hadn't heard them before. Markets tend to return to the mean over time. If you have a stock that outperforms, normally it will outperform for 3 years on average. The market, and then it tends to return to the mean over time. Excesses in one direction will lead to the opposite excesses in the other direction. We probably went a little high here, and we probably are going a little, or did go a little bit low on Friday. But I think the worst is over here, unless we find something else out. But I think the short squeeze is in. We've gone through the previews, and we're now probably going to see that run through till Friday. There are no new errors, rule number 3. Oh, it's kind of like Gibbs rules on NCIS. There are no new errors. Excesses are never permanent. Basically, when everybody starts saying it's different this time, it is time to leave. Exponentially rapid rising or falling markets usually go further than you think, but they do not correct by going sideways. The public buys the most at the top and the least at the bottom, and I think we've seen that forever. Number 6 is fear and greed are stronger than long-term resolve. His studies from a finance professor, mere statement. His studies of investor behavior show that losses bring sadness, disgust, fear, and regret. Fear increases the sense of risk, and some react by shunning stocks. Number 7, markets are strongest when they are broad and weakest when they are narrow to a handful of blue-chip names. Bear markets have 3 stages: sharp down, reflexive rebound, and a drawn-out fundamental downtrend. We'll have to see if that bears out. When all the experts and forecasts agree, something else is going to happen. If everybody's optimistic, who's left to buy? If everybody is pessimistic, who is left to sell? Bull markets are more fun than bear markets, and I can agree for this. You've got at any one time over time, studies show that the market's going up about 75% of the time, and it goes down about 25% of the time. It normally goes down very quick, leaving you to have very fast fingers to actually get it. We'll have to see it. But that's pretty much it. I just wanted to go through those real quick. We're going to get into some stocks here fairly quick when we get back. Give me a ring, 877-927-6648. We're going to take a look at some of these stocks here fairly quick. We'll be back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
And as we come back, we have a phone call, and it is Janet from British Columbia. How you doing today, Janet?
I'm fine, David, thank you. I thought I would just call and ask, and you've probably already discussed on shows previously, and I've missed it, but Maxwell Industries, what happened to that?
I think it's a combination of a couple things. One, they said that they had contracts coming with automotive companies that didn't come together. And two, they may have been pushing pushing a lot more into the front months to make the company look good. After that bad news came out, then about 3 of the insiders decided to take options that they had at about $6 and go ahead and exercise them, which is generally a sign that they are going to go ahead and sell them. So we had, I think, and these weren't the main CEO or that so much, but there was probably something rotten in Denmark, and this, I don't think anybody, from listening to the earnings calls and everything else, I don't think anybody really understood it, but someone apparently figured it out a lot sooner than I did.
Well, I know it was one that you recommended it when you brought your newsletter out at first, and so I've always been kind of following it, but I don't own it, But I happened to click on it one day thinking, oh, I wonder how that's doing. And then I thought, oh, my gosh.
No, the big problem is this thing blew out and then probably would have recovered. But then at least recovered somewhat and filled that gap, and it still may. But the problem now is that no one will believe anything that the current CEO, I think, says. So until they have a change in management, until these guys dump their shares, they've exercised these warrants. Normally a good sign, but people are saying, why? If you thought it was going up, why would you invest your money now? You can buy as much stock as your warrants allow or options allow at $6.30, I think the number was. Yeah. So the problem was, why would they exercise them now when it went down? Why wouldn't they have exercised them and maybe started selling shares when it was up around $20? And the idea is that these guys are leaving town. So, not probably one of the better things that a company can do. And unfortunately, when you get into these smaller companies, even though there was fairly decent coverage, no one really figured it out. But apparently, there was a couple of people that did, and I don't know whether they had inside information or not.
Well, I looked to see what news there was, and there was nothing particularly earth-shattering.
It's pretty buried in there, but they were inferring for 3 months that they were going to have a lot of BMW's, I think it was BMW's business and some of these other big car manufacturers, and everybody was expecting them to announce it at earnings, and they didn't. And they've been talking about it for so long that when it didn't come, everybody just assumed that they were lying. So,
well, even if you had a stop in, it wouldn't have protected you on that.
No, it wouldn't. This is one of the ones where apparently no one, you would have probably seen some heavy selling in the day before. Not a whole lot in it, and sometimes it happens. It's I was talking to Tom about it, and I said, the last time I saw that and got caught in one was about 4 years ago. If you do it long enough, you will get caught.
You will get caught.
Yeah, if you're trading, that's the good side of trading. Every few minutes, or on 15-minute charts. But, it used to be you used to have stocks halted and you still got creamed even when you were in them intraday. So, the risk is always there. The problem is that some people believe that you don't have risk, either short-term or long-term. It's always there. You just may skirt it a few more times, but one day you'll see us, even if you're trading on minute charts, one day the stock that you're in gets halted, and that's it.
Yes.
So, not a whole lot of pre-warning on this one. It was a little weak, but everybody was just waiting for those big words, BMW, that they got a contract with, and a couple others over there in Europe. They also, at the same time, lost some contracts in China, because China was pulling their money back at the same time. So a little bit of everything that could go wrong did go wrong, and since then it's gotten worse. Normally these would have recovered a little bit, but just the insider selling put the nails in the coffin on it. So I suspect this thing's going to drift down to $5, something like that eventually, and maybe they can rejoin some. And get some, with a change of management or something, get back on the track. But, they had everything chart-wise that you look for and technology-wise is great. But, of course, being in alternative energy is probably the worst thing to be in these days. But we'll figure it out. Anyway, anything else?
No, thank you very much, David. I really appreciate that.
Okay.
Thanks so much.
You bet.
Bye-bye.
Okay, and let's see what else we have going on here. 1315 for the current S&P, and we'll have to see how's this going. I haven't looked at volume a whole lot today because normally when you get off these lows, it's not uncommon. I kind of liked some of the discussion that we've had with some of the other guests that spent a lot of time at IBD, or other hosts that we've had on here. But normally they say wait up to 4 days. I think we could probably do something like that, maybe even to the next week before we start seeing real volume in this market. But actually not too bad. We did about 4.1 or 2 billion on Friday, 4.6 billion on Thursday of last week. We've got 3.2 billion so far today, with about 20 minutes to go. Not uncommon not to see a lot of believers right off the bottom, but normally if you're going to get volume, you want to get it the next 3 or 4 days. Going to be tough going into a long weekend, so we'll continue to watch that. Also, we wanted to get into some actual charts here. One of the ones I'd been watching was Alcoa. Alcoa is $8.45 low on October 4th. We've been waiting for this thing. Got close to a nickel on this. And we're going to have to see. Let's see. Got some other things. If I can get through here. I'm just feeling a little under the weather. If you can hang on just for a second here and let me take a deep breath. $8.45, $8.38 on Friday popped up. Difference on that was 26 million shares and against 49 million shares. And we'll see. Let me do. I got just a few things to do. And anyway, actually did go below it, did close back above it. Going to take a look at it here, but certainly let me get it here. 26 million shares to do it. We'll be taking a look at that. $8.45 to, did go below it, went below it on 49 million compared to 26 million shares out there. And it's okay. Arms Holdings, another one, went down and did a nice little test out here. Again, nice little bounce out of here. But a lot of these stocks setting up these patterns. On Friday, we were talking about them coming down and testing gaps. And actually, on Friday, we got a lot of tests of lows on much lighter volume. Arms Holdings, ARMH, is one of them. $22.10 on August 8th. 11 million shares. Come up to just a hair under 5 million shares again on Friday. And no big surprise, bouncing right back out of that in Arms Holdings. So a lot of these stocks, kind of what I'm seeing out here in the general marketplace, was that 80% of the stocks out there tested volume on lighter volume over the last few days. 20%, ones that everybody talks about, is doing, what I can say, just a lot better out here. But again, next one I want to look at is BlackRock. It actually went below it too. Another one setting up these low volume lows on Friday for expiration. BlackRock International Growth and Income Trust, BGY is the symbol on it. $6.81 on December 19th, and got below it by about 4 cents on Friday, with 430,000 shares compared to 1.2 million, so about a third of the volume. Pretty good indication that the sellers are pretty much gone. Another one that was very interesting was BHP, and another light volume test. Didn't quite get all the way down. Well, yeah, it did. For some reason, it just looks a little different out here. Did get down to the October 4th low, $62.54, 8.5 million shares. Got into it on Friday with 4 million shares, $62.31. And, normally when you get these kind of movements out here, you're going to notice a huge bounce out of them, at least for a while. Apple was one we've been watching. Let me go to a little shorter time frame on this one. And this thing had pretty much given the same kind of thing where they just continued breaking down into lower volumes. The last big sign of strength that you had in this was on the 14th of March, went up on 50 million shares. Tried to hit it on April 17th, and 36 million shares, went down to 38 million shares on April 24th. Had a nice bounce on that earnings, came back, filled that gap up, actually went back low. But what are we seeing today? 26 million shares. We had a lot more volume on that way up, and it acted as decent support. Again, I was talking about it at 533, but this is pretty much going back up to, I would imagine, 580 in the next few days. There's a nice little gap that it had on the way down. But if you just look at the volume on the way down out here, until Thursday and Friday last week, volume didn't even pick up, and even when it did, nothing compared to the last low at 555, 38 million shares. So it continues to be fairly light out there in these. Another one that caught my eye, and this was one I think we talked about on Friday, that's commercial metals. CMC is the symbol on it. Huge move up on volume on the 28th of November. Came back into that gap on 1.3 million shares compared to, what's that? 12 million shares. So these are, pretty good bets that you've got, not enough upside probably on this one for me to move, but certainly it looked very interesting. Did see some movements in the EU index fund. EZU was one of them. But another one where you had a nice big pop-up with volume, came back and tested it on December 16th, $26.66, 560,000 shares. Got into it with 1.3 million, 130,000 shares on Friday as you got into it. So it had a little volume coming down a couple of days before, but it's still in that 1 million range. But back testing those initial huge moves up and bouncing off what is fairly decent support. Saw a lot of these stocks on Friday that were actually industrial in what they did. Saw a lot of these things test low volume, but this one's kind of, if you're interested in penny stocks, good look, but this is the pattern you look for. Took off with huge volume on the 2nd of February. 13 million shares. Been working all the way back to come back and fill that little void out there, and that was pretty much filled last Thursday and Friday, starting to move back in, but very, very light volume, 700, and what was that on Friday? 1.3 million shares on Friday. Going to even be lighter volume today, but did actually get back and test the absolute low out here also of 2 million shares, and that 1.3 million shares on Friday, about 65% volume? So not a bad indication if you're looking at some of these penny stocks out there. GMXR. Let's see what else we have out here. HealthNet. See if we've got it on a little larger scale. Maybe not exciting enough for me. HPQ, Hewlett-Packard. Also coming out, doing a pretty good job of testing its low. Previous low was $21.50 on September 23rd, 68 million shares. It's kind of ducked down below it. If close above $21.50, going to be fairly bullish, and I imagine we're going to get that. So we'll have to take a look at it. Anyway, we'll be back in just a few minutes.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. But you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we waited at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, that GMX, I forgot to finish that up. Let me go back to that just for 1 second. GMX says GMXR is the symbol on it. They actually are in the oil shale resources, Wilson Basin, targets the Balkan, but they're into independent oil and natural gas exploration. But not a bad-looking chart out there, at least for a penny stock. So keep an eye on that if you're into all the natural gas. Interesting stock to take a look at. IGT, International Gaming. This one looked like it was may have one more leg to go down because there is a lower low out there, about 15 cents lower, but looking fairly good out here. International Game Technology makes, I guess, like slot machines, that kind of stuff. IGT is the symbol. $14.15 on February 23rd. 12 million shares. What is that? $14.15. Went below it on Friday. Did close below that price point at $13.90. But just 2.7 million shares out there. Popped right back into that trading range today and continues to look fairly good. Hang on just a second. Anyway, what else do we have? I have to take a look at it. Another one that was kind of interesting out here, might be making some short-term movements, is Kimco Realty. And that's hitting some lows. $17.78, 5.3 million shares. Got into it with 3.4. Probably not as big a differential, but these things have been hanging out here at the highs fairly decently for a while. Not much of a pushback in there today. Continue to see the market 13, 14 on the S&P cash, up 19 still holding up fairly decently out there. So we'll have to continue to watch that. Let's see. What else do we have going on here? Another one that looked fairly decent, ripe for a bounce, was the Mosaic Company, MOS. They'd been putting in lower lows. The one I was looking at is $46.50 on December 14th. And not too bad. 10 million shares on that day, $46.50. $46.50. Got into it today. $45.58, 4.3 million shares on Thursday. Just up a little bit. One of the few that actually did. Nice bounce out of there today. What did the high at? $48, $48.27. Not a lot of volume today, but don't be surprised when these things actually close below and then pop back above. You need to, like I said, give them a few days of movement out here as they are moving. So keep an eye on those. I'm trying to remember if there's another decent one out here to close the show up with just a little bit of time. And see if I can remember which one I wanted to look at. Maybe it was YPF. Take a look at this one. Hopefully if it pops up. We'll do it just a little. Okay. And anyway, we've got this a little bit of, that one wasn't the one I was thinking of here. Let me see if we've got another one. Oh, this is it, steel case. We get a fairly decent, of course, selling a lot of furniture to businesses out here. Last low out here on March 23rd, $8.25. It has gone below that. Looks like it's going to come awful close to closing back in that. Just has to close above $8.25. Tom O'Brien here in just a few minutes to wrap up tonight's show for us all out here. Batting cleanup for us. We'll see you all again on Wednesday.